Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 28th of July. All right, now we've had a pretty big week. We've had the Fed raise rates, maybe some more on the cards, depending on the data releases. And then we've had the ECB raised rates. And you know what? The market is taking it as a potential pause, right? This is a bit of disparity. And in amongst that, if you had watched yesterday's Daily Market Insight, I was talking about there's a bunch of US numbers, important ones, sort of second tier numbers in between the ECB rate decision and the ECB press conference that could impact the market. And you know what? The US numbers came out pretty strong, showing the US economy is very resilient. And that opens a door for potential another hike in the US, right? And then you've got Christine Lagarde coming out and saying we may, well, taking it as we may pause. Boom, you get that shift in the US and Europe very quickly, right? And if we have a look at the impact on the major currency pairs, it's pretty obvious. Let me just come over here to the majors, what we've seen here, right? So now I'm on the daily charts there. And actually, this is important. I'll do this first. Have a look at the dollar index here, dollar Swiss, right? The key thing here is in euro, sterling. They're still in this trend, like a weak dollar trend, right? The trend doesn't change just because they've said, you know what, there's a bit of a cross or a bit of a mismatch, I should say, with the US numbers and potentially what the ECB are going to do. It doesn't happen that quickly. CPI numbers or a change in policy can do it, but these are numbers, second tier numbers versus trying to weigh up what the ECB is doing. So long term, it hasn't changed yet, but we are setting up for a change. And if I come over here to the hourlies, right, this is, and you can sort of tell a lot from the price action. Now, the dollar index sort of dips and then the dollar rallies, right? You get the same movement there on euro, sterling, Aussie, and Kiwi, right? And you've got dollar Swiss rallying. I'll come into dollar yen, right? We've got a big BOJ policy decision today. Some stronger numbers or pretty good numbers, inflation numbers out of Tokyo yesterday, sets up the BOJ for a potential shift in their I guess their sort of context of what they're doing, a policy tweak, right? They won't change rates, but they might say, you know what, the time period for having loose rates may change, and that would be a thing for Japan. That's a separate trading opportunity, if anything, possibly the best today. Now, so we've got these moves here, right? And I was just sort of highlighting that. This tells me that's a fundamental position adjustment. So I'm just trying to get that out. Where the market, you know what, sort of weak dollars. Okay, we have been weak dollars for about a week and a half. And then you get this is a clean out, right? You clean out to the top side, downside. Once again, it's just a flush out of the stale weak dollar positions, or the short dollar positions have been squared up, right? So we're almost back to sort of normal value for everything. And that's what I was saying with the dollar positions. The overall policy or the overall trend hasn't changed just yet, but we are getting very close to the crossroads, particularly with sterling, right? Stronger US numbers. We've had weaker UK CPI numbers. Sterling looks like it's ready to be beaten up. So does euro, right? But not just yet. We need like a little, it's like the straw that breaks the camel's back, right? We just need a bit of a dollar injection, one more, and it could be enough to get things rocking and rolling. All right, so that's where the dollar is, right? So let me just focus on the key trading opportunities today. Actually, just before that, let me just come over here and show you something interesting, like the risk reversals, right? Calls versus puts. The market is starting to position up for their buying puts, right? So suggesting euros going down. And if you have a look across a number of the pairs here, and I mentioned this, I think, earlier in the week, the risk reversals were shifting, okay? Aussie a little bit lower. If you come over here to sterling as well, euro sterling probably been the sort of bigger pairs. Sterling is sort of tracking a little bit sideways. The market isn't totally convinced yet, not as much as the euro, right? And you'd expect the euro risk reversals to come into play because we've just had the ECB and we've just had the Fed, right? And that's a direct match, obviously, the euro against the dollar. So that's something interesting that we need to sort of put into your calculator and work out what's going on. So let's just have a look where the key trading opportunities are today, right? For the various instruments. Now, this is something I'm going to run through it's an easy concept once I explain it. No policy tweak. If anything, sell yen. If there is a policy tweak, right, they bring forward their long dated dates for changing policy or tightening policy a bit. That's a positive for yen. You would be buying yen. Okay. And as I've been saying, like with the BOJ, with regards intervention, they were jawboning it, right? Just talking up the potential for intervention. They've got the market on the hop here, so it could come into play. The only thing is, this sort of works against, I should say, the strong dollar that we may potentially get. Okay, it sort of unsettles this. If we had a weak dollar in the same situation, the Japanese, by sort of tweaking their policy, may get a massive move to the downside. The fact that we've got a little bit of a stronger dollar could hold things up, but the market has positioned for a policy tweak, and I'll show you that in a minute. It's pretty evident. Now, with the German GDP and inflation numbers, the GDP numbers, I'll show you New Squawk in a second. Those numbers come out. The inflation numbers come out. They're collected over about 4 or 6 hours, right? So you may have a bit of a time to wait for the German inflation numbers. But low numbers, okay, Euro CAD, it's a potential, it's at the crossroads. You may get a big move to the downside if we get weak GDP and inflation numbers. And these numbers come out a few like hours apart. So I don't think they're actually at the same time. Euro Swiss is going lower, Euro Yen lower. If we get higher numbers, well, Euro CAD and Euro, probably the trades to the top side. Canadian GDP numbers. Now, the GDP numbers have been hiding in the dark for some time, right? Across all major currencies or countries. As we saw with the US GDP numbers, they are coming into play, showing how resilient some of these economies are. So it is worth definitely having a look at. The Canadian month GDP numbers are monthly numbers, so maybe not as powerful as some of the quarterly numbers, but low numbers, Euro CAD, Sterling CAD, okay? That would be buying Euro and Sterling. If we get a high number, okay, selling Aussie CAD, Sterling CAD, it is very close to changing trend, and CAD Swiss, although CAD Swiss is against the recent trend. And last but not least, the PCE price index. Now, this comes out at the same time as the consumer spending numbers, right? So pretty good numbers to follow up. This, let me just clear the screen there. This number here to end the week is a cracker, right? We've just had the ECB, potential pause. The PCE price index comes after the GDP, really strong durable goods numbers yesterday. If this follows up with strong numbers, okay, then we potentially get a big sell-off in Euro, Sterling, and dollar Swiss, right? It's against the sort of the overall or buying dollar Swiss, but it's against the general downtrend in dollar Swiss, but you'll still get a trade. Euro and Sterling, as I said and showed you in the charts there, are primed for a move to the downside. So strong PCE price index numbers should give us that. Low numbers, well, we're sort of back into that. It sort of equalizes some of the strong numbers yesterday, and you'd expect dollar index to drift lower, dollar Swiss and Sterling there as well, right? Or buy Sterling, bouncing off that support trend line. So they're, to me, the major data releases and potentially the best trading instruments. Now, let me just get into this dollar yen, right? Because it is a blockbuster opportunity. And if anything, I go as far to say a no-brainer, right? So let's just have a look at the yen crosses here. Actually, well, let's have a look at the hourly charts. You can sort of see here exactly where the markets have positioned in for a change of the yen policy. Okay, and that's buy yen. So sell dollar yen. You've got sell Aussie yen, sell Kiwi yen, sell Euro yen, sell Sterling, like everything, right? The market has positioned very quickly after those Japanese figures yesterday. And let me just give you a look at those, because you need to sort of understand this. It's not very often that the Japanese market just becomes the flavor. And when it does, it's huge. So the CPI numbers overall in Tokyo, 3.2%. And ex-food, you got 3% above the general, on the high side, okay, above expectation. So the numbers aren't far away from what they want, but it might be it might be still high enough for them to tweak policy. And that's what we're sort of looking at. Like Japan hasn't changed rates for, what is it, 20, 30 something years. So there's no change in rates, but you can tell here short term, the market is anticipating moves here. These things have already left the building, right? So you're looking at that going, all right, wow, maybe there's no trade. This is where your daily charts come into play, right? And we are starting to see some good levels here. And what I'm talking about is in the Japanese market, look at these currencies, right? Most of the Japanese traders do trade the cloud and a break through the cloud. It is just getting there on the daily chart. So if this sort of comes out, then we may see a significant opportunity across many of these instruments, right? Because none of them have broken down through the cloud on the dailies at this point, right? Just if you've got the Ichimoku trader, putting a trade on the downside makes a lot of sense. Now, if you have a look at dollar yen and you think, well, how far can this thing go? I've got a couple of stray trend lines there. Let me just get rid of those so I don't get caught up. Have a look at the general move here, right? So look how far dollar yen sort of moved from around 114 up to 150. That's going back to, what is that, quarter 4, 22. And now they've been talking about not wanting dollar yen to weaken much further above 145. Okay, a tweak of policy at this point will see dollar yen correct substantially to the downside, right? Big change of policy. So I think even though we've seen the short-term market move, we do have an opportunity here to get into a trade on dollar yen. Okay, whether you're looking at the yen crosses themselves or even just the dollar yen. I think the major level here comes in around 138.18. Let me just get that up. Snap the point. Okay. Right, let me decide, just making sure I'm on the right level here. Okay, and I like dollar yen. For those that have been through the course, you'll know why. The Ichiban strategy here looking perfect. The thing is, right, there's no time frame for the Bank of Japan to come out and make their decision. Okay, the market is anticipating it. So there's a couple of opportunities here. The short-term ones, right, where you do get a correction here. Well, the crosses are already well below the cloud, right? So, and there's gaps here. Like, this is what you're going to expect. If they don't tweak policy, these should all correct. Okay, but getting into that trade is problematic because we don't know the time. Even if you're sitting in front of the screens, it'll explode very quickly. And it hasn't gone like that, just partially factored in the tweak. But if you come back to the daily charts, right, and look at this, I mean, if there's a change in policy, it's going to be quite huge. You look at around 138.18, and the current level is around 139.30. So the daily charts in this situation give us a great opportunity to get into the trade if there was a change in policy. And you don't need to be sitting in front of the screens. So to me, depending on where you're located, pick your favorite, right? I think I'll be looking at dollar yen itself. But you know what? It would make a huge amount of sense, right? I mean, you sort of talk about bang for your buck. I mean, we're talking about the Fed here, sort of potentially another rate hike, whereas the ECB, we're talking about a pause, right? So that works in very nicely. To me, euro yen makes a lot more sense possibly than dollar yen against the dollar. These other instruments, well, the Aussie's obviously very caught up in this. It's got a little bit of a gap there. Kiwi yen, these things will go, but you're trying to find the best. Sterling yen, well, we've got really weak UK data. It sort of smells, but you're looking at the bottom of the cloud there, like 400 points away. It might be too far. And then CAD yen, well, I don't know. That's really, as I said, you can pick your poison. To me, euro yen is the best, right? So once again, just to sort of explain that, with the whole aim is, right, So they've got this ultra low rates, right, which has always been in play, but it's about the sort of the jargon, the talk that they're using behind the policy. How long are they going to keep interest rates or the whole environment super low, right? Ultra low rates. So if they change the time frame for changing that, that's a positive for yen. You buy yen, sell all the other crap. Okay, when I say crap, I'm talking dollars, euros, sterling, Aussie, Kiwi. And if we have a look at the, and this is like a real thing that you need to be focusing on, because if you can't see it, right, check out the yen against everything. And it's not, then these things aren't lower just because the market likes to sell, like get involved at this point. So to me, you've got to be really focusing on this. It is the core action. If I come over here to my global market page, get you tuned up. You can see the Aussie doesn't like what's happening at the moment, nor does the Kiwi. And if we come down here, the yen, okay, it's up against everything. Okay, so that's the biggest focus for obviously the Asian session. The decision will come out at the end of the Asian session. And then after that, you've got all the other news events rolling out, right? So, and if we have a look here, once again, the German CPI numbers, it comes out over a period of time. So those numbers will roll in. Keep an eye on that as you go forward. But the GDP numbers, okay, you've got an expectation and a range. The German prelim CPI, okay, you can focus on those components. But the core action will be, I think, the US numbers. You've got the Canadian GDP numbers there as well, expected 0.3. And then you come down into the PCE price index numbers, right? And you got personal income and consumption numbers there as well. Spending. So PCE price index, 4.2 year on year and 0.2% month on month. Now, this isn't a big inflation number that the Fed watches very closely, right? So once again, if we get strong numbers, it supports the overall view that the US economy isn't struggling. And you know what? The Fed may need to step in again, and that will drive the dollar higher and push the other instruments lower. Now, just on this chart here, you'll see the BOJ rate decision here, right? No change of rates expected. This is sort of like down the bottom because there's no general time frame for the announcement, right? Unlike everywhere else, the BOJ officials go into their bunker. And this is what used to happen in the old days. It's changed since, but they used to get in there, make their decision. They'd drink sake for about 2 or 3 hours and come out absolutely paralytic. And then they'd just tell the market what's going on. But they're not drinking so much anymore in these meetings, but they do take their time. They are under no pressure to deliver to a set time frame. So that's why that rate decision is down the bottom. And it should be, well, it's always any sort of shift from the BOJ is big because they hardly do anything, right? But anyway, inflation, Japanese inflation gives the market a chance this time around to see what's going on. Now, just having a look here. Oh, it is 11:30. Aussies, this retail sales number, it's a final number. I don't think it's the usual number, but we'll see how that rolls around the market. If I just come over here, that's come out with me being too close to the market. I was actually sort of looking at that a little bit later, and we are seeing a little bit of a cross section here, right? The Aussie, it's going against the general short-term trend. So you're seeing a little bit of a bounce, but the price action there, not exactly super cool. I'm sort of glad, if anything, I missed that. All right, guys, great time to be doing your charts. Maybe follow my step here. I've got the daily charts here so I can see exactly what's going on. And this is one of the reasons why I wasn't sort of getting super hooked on the Aussie. It's trading mid-range, as is the Kiwi, whereas Euro and Sterling are they're in uptrends at the moment, but there's a big chance for those to be cleaned out to the downside. Okay, so I know this video is a little bit longer than expected, but it's important you understand where the potential opportunities are. There's so much happening now. As I said, it's much closer to normal market conditions where you've got robust trading opportunities across the board, right? There's no need to spread your capital across everything. Look for the best opportunities, really drill into it. When you're comfortable, put the trade on and let the market do its job. All right, guys, have a good one. All the best. Cheerio.